Hello, very good morning to all and welcome to today's Daily Dose. I'm Kelvin here again. Very good morning. Today will be Tuesday, the 12th of November, 2024. So before we start our Daily Dose, let's have a quick look at the disclaimer first, as usual. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's kickstart today's daily dose with a recap what has taken shape yesterday in terms of cross-asset classes, intraday performance, and any related important news flow or event that I would like to share with you all that could impact these broad-based cross-asset classes from a intraday perspective and as well as a short-term perspective. So yesterday, let us have a quick look at the performance of the major US stock indices first. So the major US stock indices, for the second consecutive session since Friday, we have this outperformance of the Dow Jones Industrial Average and the Russell 2000, both gaining by 0.69% and 1.47%. So this rally or outperformance in the Dow Jones and the Russell 2000 shouldn't be a big surprise for you guys, because I've covered in the Intermarket analysis 2 weeks ago regarding about this potential outperformance of the Dow Jones and the Russell 2000, heavily weighted by the financials, and as well as the Russell 2000, which is heavily weighted by US small cap companies that are dependent close to 80% of their revenue flows correlated directly to the state of the US economy, benefiting from the steepening of the US Treasury yield curve. That means the 10-year US Treasury yield raising faster than the 2-year, and as well as also reinforced by what happened as that has taken shape on last week, which is the outcome of the US presidential election, where Trump and very likely the Republican will also have a clear sweep in Congress. So right now, Congress in terms of the Senate and the House. Senate is clearly in the power of the Republican. Right now, for the votes, the final votes of the House hasn't been finally tallied yet. There's still a couple of votes more to go, but very likely the House will also be controlled by the Republican as well. Let me very quickly share the heat map of the House. Over here. Okay, very quickly, let me yes. So right now, right, this base compiled by the Association Press, which is a kind of a third-party press media, not affiliated to any of the Democrats or Republicans, so much more of a fair partisan press. So at this point in time, right, the Republican is gaining 214 seats. The Democrats is only 205. So 4 more seats before the Republicans gain a majority in the House. So very likely it will be a clear sweep of the Republican in the Congress. So with this clear sweep, very likely that Trump proposed policy of lower corporate tax cuts will be more or less be passed by the Congress. So that actually explains the outperformance of the Russell 2000, due to the fact that it's highly related to the state of the US economy, given that if there's a lower corporate tax cut, very likely that the US economy will benefit from these tax cuts. And the Dow Jones Industrial Average is heavily weighted by the financial stocks, and we know that financial stocks gain also due to a steepening of the US Treasury yield curve, and as well as Trump proposed policy of deregulation in the financial services industry in the US. Whilst the Nasdaq 100 and the S&P/X continues to underperform yesterday due to the underperformance of the heavily weighted mega cap technology stocks, that the Microsoft, Apple, and Nvidia, as well as Amazon and Meta, all close in the red, with the exception of Tesla that continues to rally more than 9 9%, rallied by 9%, pardon me, 9%. So Tesla has been rallying close to about double-digit gains since Trump won the White House, and with a clear sweep of the Republican. And do not forget why, because of the owner and the leadership of Tesla, which is kind of led by Elon Musk, and Elon Musk will play a critical role in the upcoming Trump administration. So there's a kind of a bit of a positive impact on Tesla. But you know that Tesla itself, in terms of the mega cap technology stock, is only form a small weightage, all right, by looking at the box, the size of the box, compared against Amazon, Apple, Microsoft, Nvidia, even Google and Meta. So most of them, of the heavily weighted mega cap technology stocks, closed in the red yesterday, that dragged down the intraday performance of the Nasdaq 100 and the SPX. So later I'll touch more about the short-term intraday technical outlook on the Nasdaq 100 and the Dow Jones, and how we decipher its price movement going forward from here on the intraday to a short-term perspective. And the dollar also gained yesterday. So very clearly, if I were to open up the 5-day rolling performance chart of the US dollar against the other currency. Give me a minute over here. Okay, let load for a couple of seconds. Okay, so this is the 5-day rolling performance of the dollar against the other major currency as we are speaking right now. Just try to ignore it. It should be 12th of November. I don't know, waste time to adjust this because it tends to actually hang the system while we are speaking. So very clearly, the dollar continues to rally ex-post US presidential election, also pretty much driven by the fact of Trump policy, reducing the odds of a deeper interest rate cut that the Fed can enact for next year. So dollar strength continues to persist, and as well as potentially the dollar CNH could be used as a tool going forward to actually negate potential higher tariffs by Trump heading towards China products next year. So net overall, we start to see a very persistent dollar strength, at least from a short to medium term perspective. All right, and with this strong dollar trend coming into place, that actually hit gold prices as well. So gold prices right now is not reacting as initially as positively as the Trump trade narrative earlier on, right? Because of the push up in the dollar is now impacting gold price. So gold price actually tumbled by close to 2% yesterday. And later I'll touch on more about what are the key levels to watch out for gold XAU/USD as it broke below the 50-day moving average yesterday, which is at around that 2,640 level mark. All right. So now that is the key intraday performance of the broad-based cross asset classes that took shape yesterday. Now, yesterday we know that there's no important economic data release, and this morning there is a news flow more pertaining to China released by Bloomberg. So there was some report saying that sources that Bloomberg quote that China plans to now slash home buying taxes as part of their fiscal stimulus push. So we know that one of the reasons why China deflationary risk spiral is being entrenched is more or less indirectly related to the lackluster state of the property market. So right now, China plans to actually slash home buying taxes to 1% to 3%. But however, this particular latest move by China top policymaker to revive the kind of a animal spirits in the housing property market doesn't really gel well for the related China and the Hong Kong benchmark stock indices. So after certain key levels has been taken out on the Hang Seng Index, which I covered in yesterday's intraday technical outlook, if you look at the performance right now on the Hang Seng indices continues to remain lackluster. The HSI now is down by -1%, very similar to the Hang Seng Tech, down by -1.5%. Even the HSCEI, the China shares listed on the Hong Kong Stock Exchange, is down by -1.23% as well. And that one that is getting the China A shares benchmark stock indices, the CSI 300, which is less foreign investors or traders that trade this index because of certain policies and in terms of liquidity. Even the CSI 300 they managed to actually gain much. It kind of only gained by positive 0.18% despite this kind of a positive measures that the China top policymakers trying to enact to boost the housing market. All right, so later I'll touch more on the Hang Seng index short-term intraday technical outlook. So it seems to us that right now market participants are not so rosy towards whatever positive we call it news flow that is coming out from China, because if you look at the last few sessions, China top policymakers has been failing to actually give out what is the exact amount of fiscal stimulus that they will actually try to revive. The most important is consumer spending. All right, so they do not want to actually reveal such measure, and also whatever their rhetoric is more piecemeal. That means, i.e., they say that, hey, we will try to revive the economy by having much more forceful measure down the road. But what are these forceful measure, and how do they want to actually strategize them and allocate this measure to the various sector in the Chinese economy? In a nutshell, is to revive China consumer spending. So these are lagging in nature and lagging in details that short-term traders are losing their patience on them. All right, so that actually explains the lackluster movement on the much more foreignly participated index, which is the Hang Seng indices, as a proxy to the China stock market. Okay, so that will be the news flow and the intraday performance on the various broad-based cross asset classes. So now let me touch on a intermarket analysis, that means has a higher time horizon in terms of multi-week to multi-month, more pertaining to the US stock market over here. All right, so this particular chart over here is derived from Micro. So it's a very good database that I could actually construct on fundamental data right from here. So let me analyze this chart. So this particular blue line, right, is actually US Citigroup Economic Surprise Index as of yesterday. All right, so what Citigroup did over here is that they compile all the relevant economic data, important economic data in the US, and if this data manage to beat expectation, it will slowly slope upwards. So this Citigroup Economic Surprise Index is actually slowly inching upwards, all right, in the last couple of months. Right, that means, i.e., if this index continues to rise, that means economic situation in the US starts to improve. Right, because now market is now trying to focus more on macro data. We know that the outcome of the presidential election is over, and going forward is only somewhere around in January, February, then we get a clear indication of what Trump's going to do to his proposed policy during his campaign trail. And the next step over here for the US stock market is to focus on earnings growth. All right, earnings growth. So earnings growth over here is that we know that market also will be focusing on how analysts revise their earnings call towards those key companies. Then we know that there's a couple of them to monitor. So what micro did, they also do this earnings revision index over here, the one that is in orange or brown. Okay, let me put it in 1 year so that you guys could see. Yeah, okay, so this little bar over here, right, previously was negative, somewhere around in early part of October, negative, right, negative over here. So this negativeness has started to slowly reduce. That means, what it means that this orange little bar here, the bar getting shorter and shorter in terms of the negative territory. That means lesser negativity. What it means that this earnings revision index, which is this histogram bar over here, slowly gets improved. That means there is lesser analyst downgrade going forward. All right, lesser analyst downgrade and more analyst upgrade. So that's why this histogram bar is not getting deeper into the negative territory. It slowly starts to inch upwards, heading back towards the positive territory. So based on last Friday, so the latest data was last Friday, 8th of November, by Citigroup earnings revision index, it actually inched higher to negative 0.05. So that means, i.e., lesser earnings downgrade, more earnings upgrade potentially. So net overall, we start to see a push up in the Citigroup surprise index. Macro data in US starts to improve. That means key macro data beating expectation rather than not beating expectation. And the Citigroup earnings revision index also slowly starts to inch upwards, not in the deep negative territory that was seen in early October, as there are more earnings upgrade versus less earnings downgrades by sell side analysts on the aggregate. So net overall, this fundamental data and intermarket dynamics as being portrayed by the Citigroup surprise index and the Citigroup earnings revision index, the latest data as of yesterday and as of Friday, that will be for the earnings revision index, indicate to us that from a medium term perspective, that means talk about multi-week to multi-month, is actually positively supporting the major US stock indices. Yes, there could be some intraday push down, pullback as also, but the trend from a medium multi-week, from a multi-month perspective is positive, or i.e. bullish for the major US stock indices, especially on the Dow Jones and the Russell 2000, which I shared with you all in my previous intermarket analysis. All right. Okay, so that actually sum up today's intermarket analysis on the cover for you guys, more pertaining to the major US stock indices from a multi-week to multi-month perspective. Now, let us now focus on the intraday technical outlook. That is much more shorter term in nature, lasting from an intraday maximum 1 to 2 days. All right, on the key levels and the trend they're going to touch on. So before I go through that, let me expand my screen so that you guys could actually have a better view on the chart. Okay, so as usual, let us start with the intraday technical outlook on the major US stock indices. It's a major US FX pair, pardon me, major US FX pair over here. Okay, starting with the euro dollar. All right, so the euro dollar pumped as expected over here. So it hit the first support level around the 1.0620 level before staging a minor bounce during the later part of the US session yesterday. So this is the 1 hour euro dollar chart. So far what we could see over here is that there is no clear exhaustion on this intraday short-term downtrend phase of the euro dollar. Why? Because the RSI continued to shape a lower low in line with the RSI on the price action. So right now is that the RSI has really hit the oversold level at this point in time. So potentially there could be some form of reworking of this oversold condition on the intraday basis that's being seen on the hourly RSI. So potentially right now heading towards the European session, there could be some form of minor bounces taking shape. So these minor bounces, first resistance to watch out for will be at 1.083, maximum 1.0710. So this will be my Titan key short-term pivotal resistance, which is the congestion area over here, before where we start to see that after the break of this induces yesterday's European session sell off, and this sell off hit into the start of the US session. So with that, what I mean over here is that there could be some form of minor bounce heading into the European session again. Why? Because of the oversold condition that is being seen on the RSI, that you got to work up this oversold condition. So minor bounce, short term, first resistance level to watch will be 1.068, maximum 1.0710. So that will be my short-term pivotal resistance, a tighter one for today. As long as we don't have an hourly close above 1.0710, I will still maintain that intraday bearish bias on the euro dollar. Next near-term support level to watch, 1.0605, followed by 1.0570. So which is a Fibo extension, one-time Fibo extension from here, taken from the high of 6th of November, and this 1.0570 also confluence with the slightly below the 17th of April 2024 low. So a breakdown below 1.0570, which is a one-time Fibo extension, exposes 1.0520, which is the next graphical support level over here from the 19th October last year, 26th of October last year, and 2nd of November last year, 2023. Right. Let me go back down towards this Okay, so these are the three key near-term support level to watch. All right, as if 1.0710 short-term pivotal resistance is not surpassed to the upside, as this oversold condition continues to work out, inducing this minor bounce situation heading into the European session later. However, with an hourly close and a breakout above 1.0710 tighten short-term pivotal resistance on the euro dollar, that would invalidate today's intraday bullish bearish bias, that would invalidate today's intraday bearish bias. I repeat, to kickstart a minor mean reversion rebound, exposing the next near-term resistance of 1.0780 followed by 1.0830, which correspond to the downward sloping 20-day moving average as well. Okay, so that's for the euro dollar. Very similarly on the sterling dollar as well. So sterling dollar has already almost hit our first support level at 1.2845. So I will tighten today's short-term pivotal resistance level to 1.2930. So the RSI also come close to the oversold region as well. No clear bullish divergence yet. So potentially as we head into the European session, there could be some form of minor bounces. So as long as this minor bounce didn't surpass 1.2930, we will still maintain that intraday bearish bias on the sterling dollar. Below 1.2845 exposes 1.280 figure level, which is close to the 200-day moving average. Below it sees the next near-term support coming in at 1.2750. So what's 1.2750 is the minor congestion area here of 9th of August. So net overall, potentially we continues to see this impulsive down move play out as the sterling dollar continues to trade within this descending channel that is in place since the high of 30th of September. So for today, with if the sterling dollar have a breakout of an hourly close above 1.2930, which is our tighten short-term pivotal resistance level, today's intraday bearish bias will be invalidated to kickstart a mean reversion rebound, very similar to the euro dollar as well. Break it if the euro dollar breaks above the respective short-term pivotal resistance. So the next near-term resistance level to watch after 1.2930 for the sterling dollar, where the mean reversion rebound could take shape, will be 1.2990, 1.3010, corresponding to the upper limit of the descending channel resistance that is in place since the end of September this year, and also very close to the downward sloping 20-day moving average. Only a breakout above this 1.3010 may potentially see a much more extensive mean reversion rebound scenario, exposing the next resistance level at 130.60/131.10, which correspond to the downward sloping 50-day moving average. So that's for the sterling dollar. Now, turning our attention will be the Asia Pacific currency against the dollar, starting with the Australia dollar. So the Aussie dollar continues to remain below its short-term pivotal resistance level at 66.40 level over here. So we will still maintain that intraday bearish bias at 66. As long as 66.40 short-term pivotal resistance level is not surpassed. First support level to watch up for in this bearish bias condition on the Aussie dollar on the intraday basis will be 65.20/65.10. So a break below this level potentially exposes the next minor swing low area. Okay, let me put it over here. At this 64.77 level. So if we do the Fibo extension, taking from the current push down or the current impulsive down move sequence, okay, that also corresponds almost to the one-time Fibo extension as well at 64.70. So this could be a range, 1.6477/64.70. Oops. Okay, let me write it again, 64.70. Okay, so this is the next near-term support level to watch if 65.10 is being taken out on the downside. However, if price action managed to actually shape a push up again and surpass the 64.10 level, Fibo 64.10 short-term pivotal resistance level, 64. If a bit of time to sting on my pardon me, if price action starts to bounce and surpass above 66.40 short-term pivotal resistance level, with an hourly close above it. Today's intraday bearish bias will be invalidated on the Australia dollar, the Aussie dollar, to kickstart a mean reversion rebound scenario. Next near-term resistance level to watch will be 6690/6720, which correspond to the downward sloping 50-day moving average as well. This next resistance zone. Okay, so that's for the Aussie dollar. Now, turning our attention will be the dollar yen over here. So dollar yen, we continues to maintain our intraday bullish bias on the dollar yen, but for today we will have a tighten key short-term pivotal support level at 52.85 over here, 52.85. So as long as this potential minor pullback didn't surpass below 52.85, we will still maintain that intraday bullish bias. Next resistance level to watch will be the medium-term pivotal resistance zone at 154.70/154.80. So what's 154.70, 154.80 is pretty key on the daily time frame over here. This level here, where price action was rejected on the 7th of November. Okay, 7th of November. And this 154.70, 154.80 is also the previous congestion area here. That's pretty key. Support break, tested, can't surpass it, then thereafter kickstart a pronounced decline or a multi-week pronounced decline on the dollar yen previously. So that's why this is a key medium-term pivotal resistance level, 154.70, 154.80. All right, X express on the hourly time frame. So as long as that means for my maximum bullish bias on the hour short-term intraday basis, at this point in time, I got no conviction that it could break above the 154.70, 154.80 level. All right, so on the intraday basis, we are still looking at this level as my first resistance level to watch for our intraday bullish bias. All right, but however, if price action starts to break below the 152.85 short-term tighten short-term pivotal support for today with an hourly close below it, today's intraday bullish bias will be negated to revisit 152.14 and even 151.55/151.30 next, which confluence with the 20-day and the 200-day moving average, also acting as a similar support area as well. Okay, so that's for the dollar yen. So now let us now turn our attention to the major stock indices, okay, starting with the Hong Kong 33 or the Hang Seng Index. So the Hang Seng Index continues to remain lackluster, can't surpass above the 20-day moving average despite that news flow on that potential slashing of that housing market tax potentially reported by Bloomberg according to their sources. All right, so price action hit the first support level 20,150 again, then before shipping a bouncer. So I don't want to tighten my short-term pivotal resistance to be so tight over here. So right now there could be some form of bounce back again to revisit very closely the 20,570 level area over here. So still using the 21,050, that failure bullish breakout, as my short-term pivotal resistance level on the Hong Kong 33, still maintaining that intraday bearish bias. The next support to watch level to watch after 20,150 will be the medium-term pivotal support zone at 19,790/19,445, which correspond to the rising 50-day moving average as well. So it's very important to see, because this is a medium-term pivotal support zone, very important to see how the price action react once it hit at this zone level over here on an hourly basis. So once it hit this level, it will start to form a bullish reversal candlestick coupled with a bullish divergence on the RSI that could potentially give rise to the start of a much more meaningful recovery on the Hong Kong 33, but we got to take things one step at a time. All right. However, if price action managed to surpass today a very strong push up above 21,050 for whatever reason, then today's intraday bearish bias will be invalidated to kickstart the recovery process. The next near-term resistance level to watch in the next step will be at 21,550, followed by 22,320. So that's for the Hong Kong 33, still maintaining that intraday bearish bias. On the Nikkei 225 or the Japan 225 over here, so the Japan 225 for today, we have a tighten key short-term pivotal support level at 39,510, where the price action is testing right now. We shift it slightly upwards as the price action now coming very close to the range resistance of this complex sideways range since the low of 27th of September. Right, so I will tighten the key short-term pivotal support level since we're coming very close to it. 39,510 level will be my, now it's actually holding at this level, 39,510 short-term pivotal support level. Still maintaining the intraday bullish bias on the Nikkei 225 or the Japan 225, we call it. First resistance to watch will be at 40,155/280, which is the upper limit of that sideways complex range that I highlighted earlier on. However, if price action can't survive at this 39,510 with an hourly close below it, then today's intraday bullish bias will be invalidated to see it floating back down towards the 20-day moving average, acting as a support level at 39,090/38,940 in the first step. Also correspond to the rising ascending, minor ascending trend line from the low of 28th of October. If price action gives way below 38,940, then potentially it could float back down towards the lower limit of the sideways range. Next support level to watch, 38,670, followed by 38,265, which correspond to the 200-day moving average and the 50-day moving average as well. So that's for the Nikkei 225. Now, turning our attention will be the German 30. So the German 30 have a bearish reaction right again at the upper limit of this potential descending triangle configuration that continues to evolve, potentially evolve since the high of 29th of October. One time, two time, and this is the lower limit of that descending triangle range, acting as a support at 19,020 that managed to survive ex-post US presidential election. So with that, for sure, this level here is indeed a key short-term pivotal resistance level, 19,510, 19,560. So we will still maintain that intraday bearish bias on the German 30 after the bearish reaction of it yesterday. First support level to watch for today will be at 19,260 level. Okay, 19,260 level. A breakdown below it exposes 19,140, okay, which correspond to the 50-day moving average, acting as a resistance level, acting as a support level as well, pardon me. However, if price action managed to actually surpass the upper limit of this descending triangle range configuration, that means, i.e., that could potentially indicate a bullish breakout above 19,560 if hourly close above it, then potentially today's intraday bearish bias will be invalidated on the German 30 to seek out the current all-time high area in first step at 19,690/19,755. So that's for the German 30. Now, turning our attention, very interesting, will be the major US stock indices, starting with the Dow Jones Industrial Average first, which is the Wall Street 30. So the Wall Street 30 yesterday pierced up above our short-term pivotal resistance level, so we got to actually respect that. So this will be a very strong, impulsive up mover by the US Wall Street 30. So it managed to actually come back down again to revisit our short-term pivotal resistance yesterday. This is something like a bullish flag formation. So I will actually use a slightly lower level, 43,910. I don't want to put it at 44,220. It's a bit tight. So using this former minor congestion area here, okay, previously was resisted, then shape that bullish breakout. So 43,910 will be my short-term pivotal support level. Will flip to a intraday bullish bias on the US Wall Street 30. That means forgetting about that much more deeper minor corrective pullback that we initially envisaged for it to actually retrace back closely to the 20-day moving average again. But it seems to us that the price action is very, very bullish right now, and even the RSI is still holding above the 50 level mark over here. Right, so with that, flip to a intraday bullish bias using 43,910 as my short-term pivotal support level. Next resistance level to watch will be the Fibo extension level, 44,700/44,730, a Fibo extension cluster level, then followed by the 0.7648, 0.764, all right, 0.764 at 44,990, which correspond closely to the major ascending channel upper limit from the low of 27 October 2023 low. Okay, only a price break with an hourly close below that 43,910 short-term pivotal support, then that bearish bias will be revisited to kickstart that minor mean reversion decline towards the 20-day moving average, with the next support level to watch out for will be at 43,700, followed by 43,370 in the first step. Okay, so that's for the US Wall Street 30, flipping to a intraday bullish bias using 43,910 as my short-term pivotal support for today. Now, turning our attention will be the Nasdaq 100. So Nasdaq 100 yesterday, we have that bearish bias for that pullback. The pullback hit the first support level at 21,030 before shaping a bounce back up. So right now, what I could see is that the hourly RSI also starts to shape a higher low as well. Now, pushing back up above the 50 level mark again. So with that, we will flip to a bullish bias for today on the Nasdaq 100, given that it managed to survive at the first support level at 21,020, and given that the RSI now has shaped a higher low and is now back above the 50 level mark, slightly above the 50 level mark, indicating that some form of short-term bullish momentum is coming back again on the Nasdaq 100. So we've got to respect this very steep up move on the Nasdaq 100 again. It's very similar to Dow Jones Industrial Average. So 21,020 short-term pivotal support level, flip to a bullish bias for today on the Nasdaq 100. Above 21,220 exposes 21,390, followed by 21,500 next on the Nasdaq 100. Only an hourly close and a breakdown below 21,020 will invalidate today's intraday bullish bias on the Nasdaq 100 to kickstart a mean reversion decline scenario, exposing the next near-term support level at 20,865, followed by 20,640 next. Okay, so that's for the Nasdaq 100. All right, so now turning our attention will be that gold commodities market, starting with gold XAU/USD. So what I could see over here is that gold price continues to tumble yesterday after the breakdown of that 2,665 and the 2,640 short-term pivotal resistance support level that we highlight, the Titan one. It plunged all the way down. So what I could see over here is that it just plunged all the way down, 2% decline. Okay, so let me do some adjusting. So right now, it's now coming very close to this medium-term pivotal support level that we highlighted over this level here is pretty key. So this level here is actually, if you go to the daily time frame, okay, is in fact the major descending channel lower limit since February 2024, right over here. So now back to the hourly time frame. Okay, so what we could see over here at this point in time is now tracing a elliott wave, 5-wave down, 1, 2, 3, 4, and a 5. And the 5th wave target is coming very close to the 2,600, 2,590 pivotal support level as well at this juncture over here. So given that it's coming very close to this level at this point in time, I mean, from an intraday basis, yes, it could shape a minor push down over here, minor push down. So given that it's very coming very close to this level, we know that I'm now trying to actually emphasize how the price will potentially move throughout the entire today's intraday session. So with that over here, I will actually put it as a neutrality stance right now first. Right, so given that it could actually pause somewhere around this level here potentially. Okay, so I'll put this as a neutral level for today, given that it's a medium-term pivotal support level. Okay, neutral first. Okay, this will be the neutral lower limit, and the upper neutrality limit over here will be at this 2006. Okay, give me a minute now. Yeah, this level here, the 50-day moving average at 2,650. Okay, let me delete this. Okay, so the reason why I don't want to be outright bullish, given the fact that it's coming very close to the medium-term pivotal support level again, because the RSI, there's no bullish divergence on the RSI. Okay, so that means, i.e., there could be a test going forward as we head into the London session. Then from there, we'll see whether we have a bullish divergence at that point in time before we can be more confident. All right, so or it will just continue to actually hover over there. So neutral between 2,690 and 2,650 over here. But however, instead of coming down, as we know that price is always dynamic, if managed to surpass during the London session and with an hourly close above that 2,650, that means yesterday's push down is considered as a bear trap to trap the bears, and potentially we could actually resume that recovery move if we have an hourly close back again during the London session at 2650 to revisit 2628/2715. All right, so neutral between 2650 first and 2600/2590. But however, if price action managed to actually shape a breakdown below 2590, then we got to respect this ongoing bearish momentum that is being depicted in the XAU/USD due to the fundamental fact of a much more stronger dollar into play, ignoring that at the moment that wider potential deficit that Trump policy got to be inflicted on the US economy that is longer term and supporting of higher gold prices. So below 2590 potentially exposes the next support level, at least in the near term. Okay, this zone over here at 2546, 2526 level. All right, so let me put it in writing so that you guys could have a better view of it. 200546 slash 526. Okay, so net in a nutshell, not so conviction of this bearish move. It could be a bear trap because it's coming very close to the pivotal support level. So turn neutral first between 2600/2590 followed by 2650. If today it managed to actually have an hourly push up and a close above 2650, that it will further convince that potential bear trap that has taken shape yesterday to see a potential in first step, a minor recovery in first step, revisiting the 20-day moving average 2728/2715. All right, so that's for gold XAU/USD. Now, turning our attention lastly will be the West Texas crude oil. So the West Texas crude oil continues to tumble as expected. So for today, hourly RSI have really hit the oversold region. So potentially, as we head into the European session, there could be potentially a minor bounce, resurfacing on the index, but no clear signs of exhaustion on the exhaustion because there's no bullish divergence. It's just only oversold, right? Just deeply oversold over here. Okay, so that could be a bounce. Bounce first potential level to watch out for 69.50, maximum 72.70.25, which is the former minor swing low of 6th of November, former minor swing low of 11th November, where it was taken out. Then thereafter you see this series of steep down mover. So psychologically, this could be an important pullback line, a pullback resistance line. So I will actually use a Titan key short-term pivotal resistance for today, 70.25 as my Titan short-term pivotal resistance, maintaining the intraday bearish bias on the West Texas crude oil. First support level to watch will be 67.55/67.10, which is the minor swing low of 1st of October. Below it says 65.70. So this 65.70 is important. Is in fact the medium-term support zone lower limit of this major descending triangle support level that is in place since the low of 20th of March 2023. All right, so it's still involving this descending triangle. But however, if we start to see an hourly breakdown, the hourly close below with a daily close, because it's a daily chart below 65.70, then we will start to see a major breakout scenario on the West Texas crude oil, exposing 6020/4880 next. All right, so back to the intraday chart again, the hourly time frame chart. So only a hourly close above 70.25 that would negate today's bearish bias to see a push up towards 75.25, which correspond to the downward sloping 50-day moving average. Above it, revisit the all-important minor resistance zone of 73.15, where price action can't break above it since 24th of October. All right, so that sum up the intraday technical outlook on West Texas oil and as well as the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the today's economic calendar on what are the key data to look out for. All right, so very quickly, let's go to the economic calendar. So today will be Tuesday. So today's economic calendar will be focusing more on the European session that could potentially impact the euro dollar in some form, especially or the sterling dollar directly. Will be some labor data coming out from UK employment rate and employment change. That'll be out at 3 p.m. Singapore time. Then thereafter, you will have the Eurozone Zoo Economic Sentiment Index for November out at 6 p.m. Singapore time. And during the US session, we have a couple of Federal Reserve officials speaking. 11 p.m. Fed Waller will be speaking. 11:15 p.m. Fed Banking will be speaking. And thereafter, a pretty much quiet US session, followed by at 3 a.m. Singapore time, Fed Kagasri will be speaking. All right, then followed by early session, we have Harker and Banking speaking again. So it's more today is more of a Federal Reserve official Fed speak economic event rather than economic data for the US point of view. All right, US economic calendar point of view. Okay, so with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off, wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.